First item is fiscal year 20 fund balance update. Ms. Johnson, you going to tee this up, or we're going straight to Mr. Parks?
Thank you, Mr. Mayor. Good morning, members of the board. This item is going to be an update on our ending fund balance for fiscal year 20. Mr. Parks, our Chief Financial Officer, is going to take the lead on this part of the presentation. And after the board's questions regarding the fund balance update, there is an item for discussion on the use of the fund balance for two items that the board will see on an upcoming City Commission agenda. Mr. Parks?
Good morning, Mayor, Commissioners.
Good morning.
As Ms. Johnson said, we're going to go into an update on the fund balance. The objective is to provide an update of the year-end fund balance and give an overview of the fund balance classifications as reported in our financial statements per Governmental Accounting Standards number 54. The fund balance is the difference between assets and liabilities. If this was a corporation, it would be equity. If it was a person, it would be net worth. So there in the governmental sphere are 5 classifications of fund balance. The first is non-spendable, then we have restricted, committed, assigned, and unassigned. The first category, non-spendable, is just that. Those are assets that are not in a form to be liquid, such as inventory, prepaid items, or advances, and then other investments or cash items that are not expected to be converted into cash in the near future. So that is the non-spendable category. And at this point, we have $3,515,098 in that category. The next category is restricted, and those are funds that are externally restricted. And you see there it could be from federal law, state law, or imposed by creditors. For instance, debt service would be a restricted classification. We do not have any dollars in the general fund balance that are restricted. The next category is committed, and that constraint is put in place by the commission by either an ordinance or a resolution, and in order for that to be changed, it would have to be reversed with that same action. And you see there we have $17,984,313, and I'll go a little more into the balances in a second. And then we have assigned, and these are just dollars that are for a designated use or for a specific purpose. And we have $2,170,070 there. And then unassigned is an area where we'll focus a little more on as well later. But basically, that's everything else. After you've classified the assets that exist in the first 4 categories, everything else that drops to the bottom line is unassigned. And in theory, those funds are undesignated, or they're available for discretionary spending. But you see below, in the city of West Palm Beach, we have an additional requirement that we have at least 3% of our operating revenues in a reserve. So in our unassigned balance, we have to pull out that 3% reserve based on legislation within the city. Now, this slide talks about reserves, and there's 2 areas that the city has for reserves. First is the emergency reserve, and the emergency reserve is 10% of our operating revenues. And in this case, it's $16,667,202. Those monies are restricted for use in emergency situations, and that is determined by the Board of Commissioners. Any monies available in unassigned should be spent before we hit the emergency reserves, and then we go to the emergency reserves. The other reserve portion of the fund balance is that 3%, which is basically for contingencies that we did not anticipate. That is really for one-time items that come up, should not be really used for operating expenses. And appropriation from that minimum balance shall require commission approval, and there also needs to be a plan in place if we go below the required amount to refurbish that amount of money. And in this case, we have $5,161 set aside for the 3% contingency. So if you were to look at our audited financial statements, our annual report, as of September 30th, 2020, if you look to the extreme right, those are the numbers that you would see in our financial statements. So for non-spendable, you would see the $3,515,098. I've broken that down a little more so that you could see what that is comprised of. We have the prepaids of about $57,000. Inventory is $385,000. And then we got about $3 million, which is that restated pension advance. You may recall that you passed an ordinance to expense that item in 2021. That's the restated pension advance. So that will come out of non-spendable next year in 2021. On the committed side, one of the goals in finance is to eliminate excessive funds, because in governmental accounting you have multiple funds. So one of the funds we eliminated was the arts and public places. We put that money into the general fund, but it's reserved still as expected for arts and public places. So that's at 1.3 million. And then we have our emergency reserve at the 16 million. And that is where that 17,984,313 comes from. And then under assigned, those are purchase orders that roll over. So at the end of the fiscal year, these are purchase orders that are still outstanding, and we have to reserve the money to pay those when they become due. Now, under unassigned, as I mentioned before, you see the total. Again, if you're looking at the financial statements, you would see that 14,663,000. But of that amount, 5,161,000 is that 3% reserve. We also, again, in a strategy to reduce the number of funds, we have a real estate and landscape management amount, and that is for, you may recall, when you passed legislation to utilize money from sales of buildings and properties to upkeep the city's properties there. So that's where that 1,165,000 is designated for. And then you see the 2.8 million where it says carry forward for special purchases not on POs. So what that is, that's purchases that are imminent at the end of the year, but a purchase order has not been done. So at the end of every year, we ask every department to determine what purchase orders need to be closed out, and that would happen in a scenario where the expense maybe came in lower than what the purchase order was set up to be, and there's still money there. We would close that out. But then there's other purchases that they know that they're going to have to make, but they haven't got to the purchase order process at that point. So we set those dollars aside as well. So that's that 2.8 million. So what is actually available for discretionary spending is that 5.6 million. And then again, to the extreme right, if you're looking at the financial statements, you would see the 38 million as our total fund balance, which again is comprised of those four numbers above. Okay. This slide shows you what we are required to have in our fund balances, and we gave you a 5-year history. But in 2020, we were required to have the emergency reserve, which is the 16 million, and the minimum fund balance of 5,161,000. So total reserves should have been 21,667,363. This slide shows you what the Government Finance Officer Association recommends as the optimal amount of reserves, and that is 2 months of operating expenditures and annual debt service. So for 2020, you will see that we should have about 41 million ideally, compared to the previous slide where we had just a little over 21 million. So this is just to give you a gauge of where we should be, or the recommended amount of reserves that we should have, to give you, a way to gauge where we are. Now, this slide is just, again, restating those figures we talked about, the discretionary balance at the 5.6 million. And as Ms. Johnson mentioned, there are 2 items that are coming up. It's costs for the election for the city clerk at 96,000, and then some rental lease vehicle cost, for the police. And if we do both of those, then we would be looking at about $5.3 million left at discretionary fund balance. And that is the conclusion of my presentation. Any questions?
Questions, commissioners? Commissioner Lambert?
Thank you. Thank you for the presentation, Mr. Parks. Can you describe, or maybe give me a more specific example of the item in the unassigned balance, the 14.6 million? And you gave a generic example of POs that maybe have not yet been created. Can you give me a specific, it doesn't have to be a real scenario, but.
Okay, in the, again, in the 14.6 and the 2.8 million, those are purchases that have already happened. Those are POs that are outstanding. So a department has decided that they were going to make, even for us, it could be supplies. And we have that outstanding PO that's already been issued, and we're going to have to pay it off because the expenditure has occurred. At that PO is kept out there reserved so that we could pay that off when it's ready.
Right, that's the assigned 2.1 million, right? I'm talking about the carry forward for special purchases, not on
Carry
POs.
forward could be the same thing. It's a purchase that is planned, a department at the end of the year. So this statement is September 30th. But there may be a purchase that's planned already, and it just hasn't gone through the process. And keep in mind, we do the financial statements after the fact. So some of these would have purchase orders before the statements are completed. So these are purchases that are imminent, something that's already planned and relatively sure that it's going to happen.
I think the commissioner is looking for an example of something like that. Can you guys give a real-world example?
I think Mr. Parks touched on one of them, that it could be supplies, but it could be equipment that was approved for purchase in this particular case, we're talking about fiscal year 20, that the department had in their budget some type of equipment, as an example, that they were going to purchase. But for various reasons, through the fiscal year, they did not put in a purchase order to procure a particular piece of equipment under this example. So from a management standpoint, at some point, we shut down actually putting in purchase orders because there's so much administrative work that's involved. So items that have been approved in the budget, but the departments, for various legitimate reasons, didn't get to the point of executing a purchase order, so they would still have that in the budget that was approved. And to prevent them from losing that money and it getting swept up as part of discretionary unassigned, we then allow it to be designated, as a special purchase, not yet on a PO, but they did have the board approval as part of the budget adoption process. So it really is a timing issue. Departments try to get all of their purchase orders in that I typically won't give them a heads up on when I'm going to put the brakes on a purchase order. But, it's another way for us to closely monitor and scrutinize, what is actually going to be purchased, even though it's in the budget, for example. Now, if we were in a real bad financial situation, although it was in the budget, that 2.8 million is part of approved, adopted funding that they may lose the discretion to purchase those items, because if we look like we're going to need it to balance for the ensuing fiscal year, then they would not be allowed to then go ahead and have it designated in that specific category.
Did that address your question,
Yes, thank you so much, that did.
Commissioner? Okay. Any other questions? Commissioner Fox?
Thank you. I know that we have been discussing the American Rescue Plan funds and that we don't know exactly how they will be assigned, but my understanding is that some of them may go to pay for things, repay us for things from last year's budget, from 2020. So I'm just wondering if our fund balance will change at some point for 2020, or will we just put that into the 2021 budget, or how will that work moving forward?
So, Commissioner Fox, the rescue funds will actually be in a separate fund, but when expenditures are paid for, it may have impact on the general fund and may cause it, well, the general fund balance is going to vary regardless of, what happens, but being able to recapture and pay for some of those expenditures through the special ARP funds may increase the fund balance in the general fund.
And if I could add a footnote, I think that is possible, but probably not probable when we look at where our financial situation is. Based on the American Rescue Funds, and although they're going to be in a different fund, when you look at the process that we're putting in place, the first tranche that we got of the 12 million, we're in that phase now where we're looking at the recommendations, and we're going to be doing the vetting and what have you, and then sitting with the mayor and bringing that to the commission. In all likelihood, the proposed use of those funds would be for items that are not yet in the budget. So if the American Rescue Funds were to replace funding for items that are in the budget, then those budgeted funds would help build your fund balance. But we're not in that kind of a situation. So I don't think that it's probable that you're going to see the use of the American Rescue Funds helping to build our fund balance. It's likely, but I don't think it's probable. Just knowing what we have in the budget, and then the kind of uses that the American Rescue Funds dictate how that money is to be used. So, but again, we had to go through that full process. And if, in fact, we do have an opportunity where there is an eligible project to be funded out of the American Rescue dollars that we do have dialed into the budget, then that would go toward fund balance, but that would be probably on a line item by line item basis.
Right, that's correct, because most of those purchases or expenditures will be one-off, so it'll be something that comes in and goes right back out, so that's not going to build the balance. But again, the balance fluctuates year over year, so. Yeah.
Very good. Thank you. Any other questions on this presentation?
Yeah. Mayor, if there's no more questions, I would like to just underscore a couple of points here to kind of keep this into context with all of the robust discussion that we have had last year, and this predates Commissioner Warren sitting on the board. Mr. Parks, if you would put that slide back up.
Yes,
on the
ma'am.
38. I think it's very important that the board zero ins and take note of the numbers. Because one of the challenges that we had last year, and it's very common, that staff and maybe the viewing public sort of locks in on that big number, that 38 million. But it's important to note that that 38 million is not what the city has in terms of being able to use it for budgeting. We got into quite a bit of discussion about using fund balance, and it was some really big number last year, using a portion of that to help balance the budget, and that we had, millions and millions of dollars sitting on account. Why were we going through all of the budget reduction measures? So we have to keep in mind that while 38 million from an accounting standpoint is that total number, but when you get right down to what we have to help balance a budget or to use for funding items, it really comes down to unassigned. And unassigned includes that 5 million, which is under the code, 3% of that is required to be on account unless we then develop a funding plan if we're going to use it. So I think it's very helpful when we go into the budget process, if we're going to be in another constrained situation, that everyone has the fundamental understanding that fund balance start with this big number from an accounting standpoint, but when you break it down, all of the categories, what you have to actually use to help fund projects is a much, much smaller number. It's a much, much smaller number. And in this case, if the board were to just look at discretionary unassigned fund balance, it's that 5.6 million. Now, Mr. Parks, if you would go to the slide with the two items related to the clerk, yes. So if we look at the 5.6 million of discretionary unassigned fund balance, what I want to bring to the board's attention, and Mr. Parks highlighted it, is that right now we have an invoice from the supervisor of election for our vote by mail costs. It's a much higher number than the 96,000, but in looking at the clerk's budget and what is available, we have a deficit in her budget to be able to pay that invoice of $96,210. That item is on the board's agenda for June 14th, asking for your approval to use fund balance to cover that 96,000 plus. And then an item that is also pressing, which is not on the agenda, but I would like to bring it to the board's attention so that we can add it to the upcoming agenda for June 14th, is an item for police. We have a number of rental and lease vehicles that the police department utilizes. What we have been doing is allowing their budget to be overdrawn in certain accounts, but we need to get money appropriated so that their budget would be in balance. And that is a maximum of $279,000. So I'm happy to take questions from the board. We have the city clerk here who can speak to the details of the invoice from our supervisor of election. We have the police chief here, and Captain Clark is here if the board has questions on the rental and lease vehicles.
Any questions on those particular items? Commissioner Schoaf.
Thank you. Just a question on the police rental vehicles. Certainly supportive of making sure the police force has everything they need. Not too long ago, we looked at a lease for undercover vehicles, et cetera. It was a rental agreement, I believe. Refresh me, were we just looking at the agreement and then not the funding for the agreement? Is this one and the same or different?
It's all one and the same.
So would this be then the first we approve getting the rental agreement and then this is the funding for that rental agreement?
Correct.
Okay, thank you.
Any other questions? Commissioner Lambert.
Thank you. My question isn't about those two items, but just on the presentation in general. At the end of the presentation, Mr. Parks, you mentioned by policy, we must have 21 million in reserves, but based on industry standards, it's recommended 41 million in fund balance reserves. And so in looking at this, we have 38, is that right? Am I understanding that correctly?
Actually, the number to be compared there is that 21,000 on the prior page.
21 million.
21 million, yes. So the entire fund balance is not really considered reserves because as Ms. Johnson mentioned, it's not really available. So we're really just looking at the 10% and the 3%.
So which number are we comparing to the 21 million?
The previous slide, you'll see.
What's the number?
Taking off.
Commissioner Lambert, the 41 million, that is a best practice, is compared to that 21 million, that is the total of your emergency reserves and the 3% reserves. Those are the two apple-to-apple comparison. Correct, Mr. Park?
That's correct,
Yes.
yes.
So if I could just make sure I understand, you're saying that we have 21 million in reserves, but it's a best practice to have 41 million in reserves?
That is correct.
That's correct.
Thank you.
And I think historically, just based on how we have budgeted for fund balance, we have not historically maintained that best practice. Because if you do the look back, it's always been a pretty significant variance.
Okay, any other questions? Okay,